Good afternoon, good evening. Here's Marco from HF Markets. Welcome to our live session on Wednesday afternoon, where we are going to go through actuality, events that are going on, some price actions, of course, trying to answer your questions, and yeah, going through what is going on in the markets. This week there has been quite some interesting movements. Probably you already have seen from the yen to some strength for crude oil. Interesting movement. We will have a look at them right now shortly. This is an important day because one of the most important data of the week is today is the CPI Consumer Price Index, the change in CPI, both headline and core, in the US. Here you are, Metabali. Yes, we're going to update you about the CPI. For sure. Okay, yeah, let's go. I'm okay, Akbar. Thank you very much. Thank you very much. As we are getting in the hot, yes, let's update about CPI. CPI is expected to be falling like it's falling strong and hard almost all around the world, with some exceptions. We have seen this is happening both for PPI, Producer Price Index, and CPI. So for this month, for June 2023, the change in headline CPI is expected to be a plus 3.1%, down from 4% last month. The core CPI, the one that does not include the most volatile elements like food and energy, is expected to come out at 5%, down from 5.3%. So you see that the core CPI is much higher. The one that include basic things like energy and food is quite high and still growing at 5%. Rate, at least expected to do so. But I want to stop just talking and show you also show you a couple of things. So let's start with this. Starting with the PPI. Okay, this is not the data from today. This is Trading Economics, a good provider of economical data. Here you can see what's the situation for the price producer index, the prices that the companies pay for producing things. It has skyrocketed up almost to 11%, but it has peaked almost 1 year ago. 2022. Since then, it has dropped dramatically. Okay, it has dropped really dramatically. Not the only one. Not the only one that it's going down. This is CPI. Well, this is core CPI. So let's start with this one. Let's start with the proper CPI. And you see the trend is the same. The trend is the same, Madame and Monsieur. We are going down. We are going down. We are going down fast. Actually, inflation is yes, Akbar, yes, Ibrahim. We will go at gold just after CPI that is data coming out. Yeah, and I've been asked. So yeah, prices are falling. So we're still everybody is still talking about CPIs, but prices are falling fast, falling really fast. This is the normal CPI, last at 4%. This is the core CPI. That is a little bit higher. It's a little bit more sticky. You can see that it's a little bit more sticky. It's more difficult for it to go down. But here we have something that maybe it can be a good news for you. I hope you can see my screen, by the way, that I'm sharing here. In this chart, what you can see is both the PPI in blue and the CPI in black dotted. Why I'm showing you this chart? You can see it clearly. The PPI, Producer Price Indices, has led. It started rising before the CPI and it started falling before the CPI. What it's indicating that the road, at least for a headline CPI, should be downward. Okay, should be this way. So actually, we are expecting for today, as just said, a handle at 3%, 3.1% of the normal CPI. So what does this mean? What do I say? Despite what we are talking, when you are listening, inflation is falling fast. But there's a but. It's falling fast, but there's some second round effects. Why it's falling fast? Because inputs are going down. Oil, you know the price of oil. I don't know if you follow the price of gas. Price of commodities has generally gone down, and factories that produces goods that we consume use these things which price has gone down. But what happened? Wages, as we are all listening about inflation, as we are seeing inflation during the last month, we have seen price of foods going higher, our purchase power getting reduced. Well, we are starting to renegotiate, if we can, salaries. Just last day, the data was very strong in UK. Okay. Also, companies that lost some of their profit in the past are creating an inflation of the profit margins. At the beginning, they could not rise prices of goods that were selling to you at the same rate the input prices were rising. Now they're recovering. So this is the real big fear for central banks. Wages and second round effects, and the second round effects are manifesting also in the services. So when you go out at restaurant, all these kind of things, and that's it. This is exactly what the central banks are more worried about. Said this, I will show you something that will be helpful for you, at least. I hope this will be quite helpful. This is JP Morgan game plan on today. Okay, JP Morgan, the biggest bank, US bank, and you see their forecast for today. Okay, we said that the market expect 3.1. So JP Morgan thinks that if actually the CPI will come out at this level, from 3 to 4%, and this is something with high probability, 45% of probability. SP 500 US markets will go up from half percentage point to 75 basis points. Okay, if we see a lower print in the CPI, okay, we could see even stronger move higher. In the case CPI go down, will result to be growing less than 3%, less than 2.7%. JP Morgan expects a big rally, but the probability for this are quite low. All right, the other way, higher prints. Clement, screen not clear. Oh, well, what can I do? Let me check at least. Well, I'll try with this. Okay. This is the game plan from JP Morgan. Now 230%. I hope, Clement, you are able to see it. If, on the other hand, the reading would be a little bit higher, there could be some fall. But as you can see, the probability that JP Morgan thinks a surprise to the upside are quite low. Globally, 20%. All right, so very low. They expect an inline number or eventually slightly below. Said this, I cannot show you here, but I was checking, for example, I don't know if you know things named the Fed of Atlanta publish stuff. Thank you, Ibrahim. Yes, Clement, please try to change your settings. I was saying the Fed of Atlanta is publishing a thing called GDP Now using indicators. How to say different indicators, but it published both the GDP Now and also I don't remember if Atlanta or Cleveland, but it's publishing estimates that are quite accurate, to be honest, about the CPI. Actually, they are expecting this Fed measure is expecting a 3.2. So it's slightly number above the consensus, that is 3.1, but nothing to be seen. Nothing to be worried about. All right. The idea is that one, Madame Messier. Yes, Musunda, good afternoon. And yes, by the way, CPI will be in the afternoon, just 1 hour and well, in more than a couple of hours. Anyway, so so it's difficult probably to see a big surprise. What about despite the market, how this will affect the Fed, for example, the Fed policy. So the dollar and the gold, I will stop talking about this now, and we'll move to gold as it has been the second question. All right, this is Bloomberg. Probably there's too many numbers, but the number that you need to take into consideration is this one, 88%, 89% probability of another hike, 25 basis points hike now in July, in just a couple of weeks. You will decide if how this affect the dollar, especially also the gold. We'll speak about this now for your trading. And honestly, they are not, the terminal rate for the Fed is at 5.4% in here it is. Look, in November. Okay, 5.42%. So one more, despite everything you listen all around, one hike is certain for now, for July. A second hike, despite what the Fed is trying to say, despite the reports of many newspapers, blah, 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 a second hike is not priced in yet. It's not a done thing for this year. All right. So, so this was basically the idea about the CPI. All right. So let's move with gold. That has been the second question, and it's very, 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 very interesting. It's very, very interesting because it's correlated to interest rates. All of the things that we are talking about, Fed, blah 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 blah. How the CPI will affect. Obviously, higher CPI, higher than expected. What would mean that probably that second hike that I was talking about will that is not implied right now will happen. If the CPI is higher than expected, probably the market will think that Fed will get more aggressive, and this is not good for markets, for stock markets, and all of these kind of things. Let's go with gold. Let's go with gold. Let's go with gold. Here's silver, interesting as well. And here's gold. Here's gold. Here is gold. I want to, well, I don't know, have it ready. If you have followed me sometimes, I've spoken a lot of times about the direct, sorry, sir. Sorry, sir. The very last thing I want to tell you about CPI. Okay, let me check if I'm able to show it to you immediately. I think so. This is from Bank of America, another big bank, and this is telling where we are now, and is showing you what will happen accordingly to the growth, to the monthly growth of CPI. You know, I've been talking about yearly numbers, like 9.1 and 4% yearly numbers. Once again, inflation peaked 1 year ago, June 2022. Okay. Anyway, If the month-on-month will not be able to stay below 0.2, the yellow line, we'll get higher inflation again the next year or at the end of this year. Anyway, let's talk about this. Gold has a huge inverted correlation with the stuff. The stuff are real rates. Okay, it's the 10-year US minus the inflation, the break-even inflation, whatever. And it's inverted, and it's inverted. So generally, when this thing goes up, when real rates goes up, gold goes down. I won't be able to show you directly in one chart the correlation, but you can notice that real rates are high and gold is really high. Gold is really high, and it's not going down. Okay, it's not going down. What does this mean? This means that some of the two things must happen. Either gold will go lower, much lower than we are now, or real rates will go down. Real rates for going down, it would make sense a big surprise in CPI today and during the next appointment. But as for now, gold is still, in my opinion, and because of its correlation with, it's not this one, sorry. With real rates, gold is too high. But let me check, as I cannot, it's not this one, where is the right one? Come on, where is it? Yeah, here it is. Here it is, okay. This is a model by Fidelity, a big asset manager, okay. And you can see the correlation with tips, it's 86%, it's very high. It's very, 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 very high. According to this model, the model thinks that are absolutely long-term, it should be at below 1,000 gold. All right. If when we take Fidelity, takes under consideration the model based on PCE, let's say CPI, should be anyway $250 lower than here. Models are very long term. You cannot trade with them, but keep it in mind. And so, what happened here? So let's do the following and see what's going on with gold. What's going on with gold? Okay. First of all, when we first had that tips, that real rates at the levels that they are right now, it was October 2022, it reached 170, and then it stayed almost constant. Where was gold in October 2022? It was here, 1,680, 1,700. This is already November. October was lower. Keep this in mind. Keep this in mind. The channel, the most normal channel, I hope you can see it, has been clearly broken. Also, another alternative trend line has been broken. So yes. So we were. Let's put it this way, in a downtrend. Okay. It looks that also this downtrend has been broken very, very recently. I told you at the beginning of the meeting, of this briefing, how you want to call it, but we've seen some strength in metals. All right, gold seems to have broken the downtrend, and so seems to have done its twin, let's say, silver. Obviously gold lead, but I always say that trend lines are not and all indicators, everything about technicality are not absolute truth, but are only hypotheses that we use for working. So the fact that what we defined as a downtrend till now has been broken does not mean that we want, at least me, want to go all in long on gold. So I want to take under consideration other hypotheses. Another hypothesis may be that but finally the downtrend is less steep than initially thought. It could be. We can see that the price is still into, can be classified, can be organized into a descending channel. Okay, so saying all this said, saying the big divergence with real rates, something must adjust there. Might it be gold or might it be real rates, interest rates? Seeing the importance of also of 90-40 as a level, and as important has been 1900 here, where it rebounded. Important. Why? You can see it. Has been a support several times, support and a resistance area. All this said, I still stick with a long-term idea that it's too early, absolutely too early to go long gold. Absolutely too early. All right. So yeah, I would absolutely have a look at the recent levels. I mean, 90-40 and 1900. Let's switch to a lower time frame, to this 1 hour. Okay, so I will stick to these two levels, and yeah, I'm as a fundamentally, it's too expensive to me yet. On a technical analysis perspective, yes, it has broken this trend line. It can have some further upside, but it's still finding some serious resistance. Don't go long. Where are we now? Absolutely, eventually on a break above, and yeah, that's it. This is what I have to say about gold, Akbar. I don't know if Akbar and Ibrahim. Hope it was satisfying. Now let's okay. As we are talking about CPI, US, and yeah, you can still see my screen. Fantastic. As we're talking about CPI, US rates. Okay, let's go and check the dollar, shouldn't we? Let's check the dollar, and we will start from the dollar index. But it's easier, much easier. Where is it? The dollar index? It's not here. Yeah, it's here. Okay, this is the dollar index. A basket of a dollar against I don't know, 6, 9 big currency. Anyway, it's a fantastic way for having an overall view. No, Akbar, no, I haven't said this. I haven't seen that in one word there's more probability of gold to rise. No, my idea is the opposite one in the mid-long term. Eventually, as right now a short-term, a mid-term trend line downtrend has been broken, there could be some more upside, but 90-40, 1940 is a strong resistance. And as I try to explain, the overall fundamental framework, in my opinion, goes against a further appreciation of gold soon. I would say that in a couple of months, I believe that it will break recent low below 1,900. I don't know if this week. No, nothing this week. Even if with the CPI data anything can happen. Imagine a strong CPI data would send rates higher. You're welcome, Akbar. You're welcome. Will send CPI higher, the probability of Fed hiking higher, rates and real rates higher, and gold much lower. A stronger CPI today. Let's say 3.6 instead of 3.1. Okay. I will, as JP Morgan said, we have seen at the beginning, I will send stocks down, but We don't have to happen anything there. Dollar. I think it's quite clear. The dollar, huge support, just here, long-term support, just here where we are, just here. The levels, you can see them. They are between 101, what has been basically touched today, and 100. We got up down to 140, 43 back in April. Okay, when we got there, we immediately started to rebound. So this is a very interesting moment for observing dollar. Yeah, because it's on a strong support. It's something that is on support while clearly being in a downtrend till now. So here things happen obviously to rebound and are going to attack once again the downtrend or a break. I must say that I don't have those clear ideas on that. I believe that in the long term, dollar will weaken. I believe that the Fed, it's not that I believe, the Fed is close to the end of this tightening cycle. It's closer, at least, than European Bank, Central Bank, and for sure the Bank of England are. So this could be one of the reasons to for us to get a weaker dollar. But it's never good to anticipate. Trading is not about anticipating. Trading is about having levels. Levels we want to monitor. Let's see if with 4 hours it's okay. It's up to you. If you think that it will be at least a temporary strengthening and a new attack to the downtrend, here you can place a long order and you will have stop loss very clear, very clearly. No, okay, because if you buy a 183, 30 cents lower, you can clearly know that the low has been broken. It will go down, and so this is a kind of trade that provide a good risk-reward ratio. The recent weakness of the dollar can be seen in many other pairs. Okay, euro dollar. Can you see the euro dollar? We in a post recently we were talking about the fact that it's not going. It has been going almost nowhere during the whole year, because during the whole year euro dollar has stayed between 105. Rahul, hello Rahul. We have talked about gold and CPI till now, very shortly. Inflation is going down all around the world. Gold is too expensive related to real rates. A surprise to the upside on CPI above 3.1 on the headline will certainly push the gold lower. Okay, just so, but sorry, I won't, Rahul, sorry very much, I cannot get back to this. Probably you just connected. We talked about this during the last 30 minutes. Okay, so yeah, hope at least this short resume has helped you. And yeah, euro dollar has been stuck between 105 and 111, basically 110, 111 during the whole year. It's one of the tightest range in year for the first months of a year. It has moved no more than 5. You're welcome, Rahul. No more than 5 big figures, like they're called, or handles, whatever you want, if you want to look like a trader. And yeah, that's it. So we were noticing anyway a structure of slightly, you can see here this white channel, slightly ascending lows and highs in euro dollar. But you can also notice the strength of 1.10 and a half, 110.50, 111. Okay, so we're in the same situation somehow of a dollar index. We're close to a very important level. If the dollar index breaks to the downside, the euro dollar will break to the upside. I believe in the long end. That does not mean tomorrow, next week, or by the end of the summer. That should be higher and the dollar weaker, I believe. But with long end, you don't trade. I mean, you can invest, but it's something different from what many of us are doing. Same thing. Same thing. Look at the situation of a cable, and then okay, these are big majors. Hey Ryan, these are big majors. Cable, sterling against the dollar is one of the strongest. Has been one of the strongest recently. Now surpassed by yen. We'll go over it in a while. And you can see here the structure is a little bit different. A clear downtrend has been broken long term recently. No, it has been broken recently. So second part of June. Okay. It's not overbought RSI yet, the market is positive and so on. Bank of England is the one who is more behind the curve, has more job to be done. It's now at 5%, the interest rate. A few days ago, traders were pricing in 100% probability of 6.5% terminal rate, 6.5%, 1.5% higher, with some bets at 6.75%. Earnings, people wages for people, including bonuses, are still going up. So yeah, probably the action of the Bank of England, the old lady is the one is supporting for sure the sterling. Sterling, you see, the trend line is quite clear, even if it's somehow tightening a lot. The downtrend, the red one, has been broken, but we are once again here close to a strong resistance and so on. Anyway, fundamentally, at least about the monetary policy, Akbar, yes, I will answer you right now. Fundamentally, has best fundamentals, at least sterling, at least for what monetary policy concern. Sorry, I had forgotten now of using this feature, clicking on your question to show everybody. Now I remembered about it. So, sir, what are your main things you consider with trading with news? I prefer to trade with a price, not to trade with news. I don't think it's a good idea, trading with news. Anticipating news is an awful idea. Before the release of the data, like one today, saying, I believe it will be, inflation will be higher than expected. Yes, I feel it's the way. That's something, that's gambling. That's 50%. You don't have control on anything. You know perfectly when the news is widely followed, it's important, there will be big movements. So maybe you place the order just before the release of the news, hoping to get the big gain fast. Well, it could go well once, it could go bad the other time. A bad surprise, and because of the high volatility, you will probably get into a big loss fast. So what I will tell you, if you want to trade with news, is to react to them. React, don't anticipate. Wait for the news to be released. When it's particularly important, for example, like today one or other ones, leave it 5 minutes. If you're trading intraday, leave it 5 minutes. Leave it 10 minutes. Leave the first reaction to happen, and then you will have the time. You will have the time to go into the trade after the first chaos is over. After 5 minutes, 10 minutes, maybe you will get an exaggerated move to the upside, to the downside. You can just the contra trade on an intraday basis, something 5 minutes. It's up to you. Don't anticipate news and try more to follow the price. I usually, for example, how I have all, and everybody should have all the instruments already studied on the long term. I don't change these lines on not every day for sure, not every week, not every month. I have them. So these lines are not here because the last days I put it. They were already here. Okay, I just did something a little bit different with gold. Yeah, but always within with that framework. No, so in a framework that is already working. So yes, be careful in don't anticipate news. It's gambling, but one is gambling. It's not trading. Trading is having some levels and exit levels at the beginning of a trade. Okay, so yeah, that's it. Viava. I don't know if you have noticed it, but just after this live, I will publish an article on our analysis.hfm.com webpage. By the way, also follow our HF_analysis page on Twitter, for example, where we share a little bit more of news. Yen, have a look at it. Yen is okay. Dollar yen is falling, meaning yen is getting stronger. We have been talking for a longer time about the 145 level. Yen was depreciating too much. Here, during the past autumn, all of these big red candles. This has been the intervention from the Central Bank of Japan. There was some fear that above these levels, BOJ would have intervened again. It doesn't went this way. At least, even if eventually BOJ is buying some yen, but it could even happen. It's doing it in an orderly manner. It's not doing back here the first time from 145 to 140 in just half an hour or less. The BOJ just placed a gigantic at the market order of selling dollar against yen, of buying yen. What does it mean, a gigantic at the market order? That it just hit all the levels. So if you, I don't know, here you sell just 100 at the market, okay, it must be filled at every level. What does it mean? That maybe you have 10 demand bids and 144. You get done and you are still selling 90. Is a number. Just the next demand is 143.50 for 20. Bam, at the market for all that 100 before, and so the price just go down or up. This is something that generally institutions don't do, central banks don't do, but it was a message. Not going on now. Back then, just for you to have an idea, back then that was the beginning. After that, Japanese pension funds, insurance funds, all of this started to repatriate, to take their money from overseas, from their investment in US, in Europe, take back to Japan. Why? Because they were also thinking that Bank of Japan would have changed its monetary policy, 10-year yield curve control, and so on. But it hasn't happened. And probably right now there's the feeling that we could be closer to some change finally after decades, basically, in the Bank of Japan policy. I don't think it will be, even if many commentators believe in a tweak of this very technical stuff from 10 years to 5 years, yield control. I think they won't do that. It will be risky, disaster. I won't explain it here. But, they have a minus 0.1 official interest rate, rising it to 0.1. Why? Because wages started to go up, inflation, thanks to rising input prices, has stayed higher than when watch target during more than 1 year and so on. Well, why not? This could even happen. To me, it's structurally weak, the yen. I mean that the dollar yen in the long run, long term, should and could even go higher. That doesn't mean that in the short term it could still go a little bit lower. Now, if actually there's a change in the monetary policy, now we have a trend line close to 139, 139. We have touched 139.30, I think, this morning, something like this, or 31. Anyway, it could even rebound here. Who knows? Even if this first trend line and this support level in the 139 and lower area is breached, it's not a big problem for the long-term trend. The long-term trend is passing lower as the moving average 200 is doing. But on a structural long-term basis, it's not good. It's not good yet. Even if I raise rates to 0.1, just making an example, the differential with Bank of England that will get to 6.5%, 0.1, 6%, 6.5%. Where you get more money if you invest in fixed income, like banks, like pension funds do. Okay. So, all right. So we have covered some. Come on with a question. Come on with a question. We covered some gold, CPI. Today, what else? Let's go to indices. Let's go to indices. Let's go to indices, SP500, Nasdaq, all of these kind of things. Okay, we start with the news. With news, we will publish a reel today, probably. Actually, no, for sure, if not a post. Okay, this is German DAX. Leave it here. You see, the lines are already on the chart. You must analyze the price more than the news. Nasdaq. Nasdaq, there's a news. There's a news because the biggest companies, you've heard a lot about the big 10 companies, the mega cap having a huge weight on. Sorry, Akbar. What indicator also include what indicators? Say what? Could you be more accurate? That I haven't understood the question. Well, you will receive my message and return to me. Yes, what happened with Nasdaq? Let me check. Where is the article? There's an article. Nasdaq reshuffle. We'll reshuffle. So what's going on? Rebalancing. Basically, what has happened is that the big mega cap, Nvidia, Microsoft, have a too huge weight on the index, on the Nasdaq 100. Okay, they have been leading the gains, as you perfectly know. Also Facebook is up 130%. Nvidia must still be plus 180 on the year. Okay, but what happened? All of them, all together, Microsoft, Apple, Nvidia, Amazon, Tesla, are now combined. They wait for 43.8% in the index. Okay, and this is something bad for Chavez. Something that is not allowed by the SEC. At some point, it must not exceed the first 5, must exceed the 40%. So Nasdaq is thinking to change the weights in their index in Nasdaq. So these big companies that have led the way till now, Tesla, Nvidia, Apple, and so on, will account for less, and so will be weaker in the attraction of the index. Besides that, you have to know probably there's funds, the ETFs that replicate the index. Okay, what does it mean? There's a portfolio manager that, according to Waze, just buy all of the stocks, single stocks, to put it in a fund. For example, one of the most famous is the Triple Q. Okay, here it is, the QQQ ETF, exactly, the Invesco QQQ ETF. So if the Nasdaq decide, and it will decide in the next 2 weeks, before the 24, to rebalance, to reduce the weight of Apple, of Microsoft, Nvidia on the index, this portfolio manager will be forced to sell this stocks. So just keep it in mind. So what am I thinking? Also include what did indicators say about CPI? Well, indicators. I don't know if you're talking about technical indicators. Don't say anything about CPI. The overall trend that we have seen at the beginning is what telling us about the CPI. It's going down. Okay, it's going down. When I won't be that accurate right now on this slide. You can analyze the single segment of the CPI, where the price is going up, where it's going down. But, yeah. So back very fast. Back to the Nasdaq. Nasdaq close to this year highs after this huge performance. This could have been a top 15,250, a double, a triple, top, whatever you can see have been tested many times, March 2022 and so on. It has not been breached till now. We have arrived here with RSI overbought. Now it's not overbought anymore, but because of the strong momentum, it's difficult. It looks like it's difficult for the Nasdaq to go down. The steepest trend line is still intact, but yeah, expensive is expensive. That doesn't mean that it could not get more expensive. All right. And we have a similar situation in several different indices. This is SP500. You can see that it find a similar level to Nasdaq 15,250. On SP500, we can see it at 4,455, 460. Okay, here besides RSI that was overbought, it is very slightly diverging right now, but very slightly. We have a MACD that at least the histogram has crossed to the downside, but once again, the momentum is strong. All of this stuff, in my opinion, are expensive, but don't fight the momentum again, or be very cautious in doing this. So, frankly, it would not be impossible at all to see SP500 even break the recent highs and get up to 4,500. For example, this could happen easily even today with much weaker CPI than expected. That's back to your question, Akbar, about the news. You see, it's not good. It's not good, great, you see on my night that interest. It's not good to anticipate the news. We must have our plans, our ideas. We must know that expected 3.1. We have analyzed, for example, SP500. We see that there could be some room eventually to 4,500, even if it's expensive. But it will happen. Why not? Just 1% higher. What's wrong with that? How it will happen? If at 2.5 European time, in a couple of hours, basically, we will have a weaker 2.9 CPI, 2.8, a weaker one. What does it mean? That the Fed should not be that could be not that aggressive in the future. This could take this kind of number could take the SP500 higher, for example, on the short term. I mean, obviously. And yeah, so just wait for the number, see the reaction, and sure that it won't jump 1% in 1 second. Maybe it won't take too long, but you will have the time to enter the trade after having known the number, not before. Okay, so SP500, Nasdaq close to the highs after huge performances. Dow Jones is a little bit different. The performance has not been huge at all, because in January 2023 we were just 3-4% lower. I would say we were here close to 32,900, so 1.34%, yeah, low. So eventually, if you believe there's more room to the upside for indices, you could think about also about this index that has underperformed. Okay, for the long. You can also do spreads, by the way. I won't advise you this kind of things, but buying something, for example, the Dow Jones 30, while selling at the same time, for example, the Nasdaq. Why? Because you think one has outperformed, the other has underperformed, and you will believe that it will mean revert, will go to more natural long-term levels. And yeah, and that's it. Here I don't have the Asian indices that are very low, especially the Chinese one, despite. Okay, this is the Australian one. Because about is, well, nothing special here, to be honest. Okay, well, the Nikkei was close to 33 years high with this weak yen. Now that it's strengthening, it's going down. Look at the Nikkei. This could be interesting as well. It's very close to the trend line. You see how I move it, because you don't have to fall in love with the trend line you have drawn. There could be several interpretations. So the first thing, let me just do one thing, properties to 25.000. Sorry, my Italian, that's it. Oh, it's not clear, no? This way, yeah. Why? Because just considering, I don't know, the lows here, no? Or the close. Here you see I'm starting not more from the low, but from the closing of this. Which date was this one? Of in March. It can change a lot. It can change a lot. Just tweaking a little bit our trend line. It's still the same framework that we are working on, but the difference can be a 1 or 2% difference, that maybe one trading leverage will cause us damage. Okay, so always try to have different possible scenarios always. Okay, now let me just delete this one. That's it. Anyway, Nikkei, yes, Nikkei can be interesting. Look how the indicators are going down. The RSI is going down. MACD is about to, not to turn negative, but yeah, it's going down strong. Have a look, especially a stronger yen. So, for example, dollar yen going lower will help push this index down. Now, oh, the last 5 minutes. The last 5 minutes to go. Let me think. Yeah. Why not? Well, let's do one thing. Let me do one thing. First of all, hide this all. Then, because last night there has been the Central Bank of New Zealand stuck. I mean, hasn't changed for first time since October 2021. Hasn't changed its interest rate at 5.5. Very fast. Also some a conference by the Reserve Bank of Australia governor. May have reacted in a similar way today, going higher and then down. You can see it. This is for 1 hour. Let's stick to the To the daily. The daily, I see that probably New Zealand is clearer, a little bit clearer, because we can set a trend line. We can set a trend line that has been basically tested today, but the price is above the moving average. So depending on your trading style, Aussie dollar, who follow me, I've been talking for it. Sorry. Yeah, it has been trading between 0.66 and 0.68 constantly for months, even worse than euro dollar. Okay, so again, a few days ago, 66 was a good entry point. A good selling entry point is above 68. A good buying entry point for Aussie dollar is be close or below 66. Right now, we have the middle of a nothing. So you should just observe this, unless you don't want to try to trade with shorter time frames, whatever. And I don't know, you're not interested in a longer term perspective, but you're just trying to check some entry levels. So you can use this kind of shorter time frames. Anyway, look how lateral is the Aussie, and the New Zealand is looks a little bit weaker, but still. Anyway, Bank of New Zealand has stopped. Hey, Kitumetse, we've talked about CPI for a long time at the beginning. Well, I will get back to you. I'm interested to this platform. How can I contribute to this place? Kindly inform me. Well, by signing up, by opening an account with HFM. This platform is the platform that we offer. We offer several platforms. MT5, this is actually MT5, MT4. The previous one, it looks very similar. We have our own platform, but it's very nice on the mobile, but maybe it's more clear, more fancy to use. But on the desktop, if you have just to download from our website, MT4, MT5, enter your account number, your password, and you're done. You're done. Kitumetse, as said, sorry, the CPI is expected to go down, the headline to 3.1, while the core to 5%. It's going down fast. So the thing is a surprise to the upside, let's say 3.5. Okay, even Corner is asking the same thing. But sorry, we started with this. We talked about this for the hours. But anyway, let's say a surprise on the upside. Let's say 3.5. I just say a casual number on the normal CPI of a headline one. What it will cause investor traders to think that the Fed will still need to be more aggressive, have more room, the dollar to get stronger, gold to fall, stocks to fall, and the other way around. Let's say 2.6 headline CPI. By the way, I'm always talking about headline CPI, and core is more important even, but just to be clear. Okay, so let's say 2.6. Well, no need for more tightening by the Fed. Dollar will weaken, will probably break or go below that 101 level that we indicated on the dollar index. Gold will rise, and stocks will rise as well. Probably that 4,500 level that we just seen previously, the SP 500 will be hit. Well, just as a couple of new persons, Court and Joy Deb are asking about CPI, I will show you a thing that I believe it's quite useful for you. And this is the plan of action from JP Morgan here. Okay, expectation is markets 3.1%. What the JP Morgan say, this is the most probable stuff. If actually happen this way, SP should be go up 0.5075% during today day. If CPI is getting higher, it will S&P 500, Nasdaq, and Dow Jones will go down. If we get a reading above 3.7%, JP Morgan believes that there could be a sharp sell-off of more than 2%. Okay, but gives a very low probability to this. And the other way around. The other way around, very low CPI will spark a rally. That's in equities. Okay, in equities, and already told you about the reaction also for dollar and so on. Well, this is what I have to say. 30 minutes to the CPI. 30 minutes for the CPI. There will be also the Bank of Canada interest rate decision a little bit later. Expected an increase to 5%. I have a dollar CAD. To be honest, I don't track dollar CAD that much myself. Personal taste. You are free to track, trade, whatever you feel more comfortable with. This is dollar, dollar against the Turkish lira. Nice, nice rally. We don't have anything against the dollar. What I was looking for? Dollar CAD. Yes, I have dollar CAD. But as I told you, I don't really track it a lot. So yeah, it's going down. The long-term channel is awaiting two big handles lower than here. No, two big handles lower than here. No, because right now we are at 132 and 25. 130.75 is awaiting how we could get here. For example, yes, with Bank of Canada actually rising, actually be hawkish. We will need to rise again, while a weak CPI that will depreciate dollar, so dollar will go down. The direction would be this one for the dollar, and the same direction would be for the Canadian, because okay, when the US dollar CAD goes down, dollar depreciate, and Canadian appreciate, as you can understand. So, Madame Messier, basically this is all. Then I'm gonna call the day, because we are above our the last couple of things very fast. Oil, why not oil? Here we are back with gold. For whoever haven't seen gold previously, we have talked about it. Palladium, I don't know. I don't think many of you follow Palladium. Look at which interesting level it is. Okay, we were showing it during the last days when it was close to 1,400. It has broken. Now it's below that very important level that stays at 1,350 roughly. Okay, but yes, don't deviate from what I wanted to show you. Oil in this case, I think that in this case something could change, because the efforts by the OPEC to cut production are strong. Well, leave it, I hate the screen. Are strong. After the OPEC seminar meeting in Vienna a few days ago that happened just here, close to 67, and following the new cut from Russia and the extension of the Saudi cut of 1 million barrels per day during August, started rallying again. It was going down because the idea is that demand all around in China and all around the world is weak. But hey, it's moving in a very interesting way right now. Also because you can see that since the beginning of May till now, it has been compressed between 67 and 50 to be fast, and let's say 74 and something. Okay, with a high 74 and 50. We are going above that. With a market that is turning positive, with a RSI not overbought. have a look at this, because producers are really doing whatever they can to make more money themselves while selling oil. Okay, and let me think which was the very last thing that I wanted to tell you. I don't remember. Okay, let's let's have a look at the very last thing, FANG. So, no, I remember what I wanted to show you. Oh, what is this? Why I have this here? Why I have this here? Just close it. This is the, we always talk about rates in US affected by the Fed. This is the future of 10 years US, right? You can see it has broken something. It's a clear downtrend. Price of the future going down, rates going up. It's clear. Here is the American one, the US one. Here's the European one, the Bund. But purely technically, it's even more easy. We are close to a it's not a double bottom, but we are close to the lows that we had at the beginning of March. And I don't know where I have all of these lines here, but here is the English one, the gilt, 10-year gilt. All of them in a downtrend. All of them are still a downtrend, but here you can have an idea about rates. And so, and then I will finish, seriously. FAMUX, that big, we have talked about NASDAQ, rebalancing of NASDAQ that will take place in 12 days. And a very fast look at where are our stocks, tech stocks. Google, Alphabet, Google, it's has lost the steepest trend line, but it's testing the previously lost downtrend. Anyway, above it, but the most recent thing, it has lost the uptrend, and side going down, marked just negative. Okay, this is Alphabet. Yes, it's Alphabet, meaning it's Google. Apple testing the trend. Have a look. It could break. Could it break it? Up to you. It's indicators going down, marked crossing to the downside. The histogram at least. Very steep rally. Very steep rally. These are all-time highs. You choose. Amazon has been laggard for a long time. You see, Apple has all-time highs. Look where Amazon is. Why? So there's no time for talking about this. But the uptrend has Kitumetse. Okay, we'll get to you right now, and we'll end with this one. Well, the trend line is clear. Microsoft has broken the steepest uptrend as well. One of the best performers. These are all-time high, 350. Indicators going down. So it's starting to deteriorate the picture for the biggest name. Nvidia, okay, plays in another league. All right. Tesla is like Apple, testing the trend line. Have a look at this. Have a look at this, because when broken, it could change something. And also we see the movement within the channel, and just recently has been the upper part of the channel has been tested. So this is the general meta. Above the trend, finally it's closing the gap. It's closing the gap opened at the beginning of 2022, right? So, and we will close with this. I'm gonna buy US dollar pace. I'm feeling a buy. Kitumetse. I don't remember if it were you who made the question about the news, how to trade the news. No, it was Akbar probably. Well, it's not that important. Yeah, it was Akbar Ali. And I told him not to trade the news, not to anticipate the news, to react to the news. I'm gonna buy US dollar pace. I'm feeling a buy. Yeah, you don't have to have feelings, because market don't care about my feelings at all, about what my position is. It will go its way. So stick to levels. Stick to levels. Let me go the very last time back to the dollar, and I'll back to euro dollar. Come on, why not? try to talk about some kind of levels. Even okay, the index is very clear, but so yeah, you are. Where are you? Where are you? I'm gonna buy euro dollar pace. I'm feeling a buy. If you're gonna buy euro dollar pairs, that means they are gonna sell euro dollar. If I correctly, if you're buying dollar, you're selling euro dollar. Okay. Okay. It can make sense. It can make sense. We have an area here, 110.50, but it has not been touched yet. But it's a resistant area. It's a good resistant area. So if you feel that you should not feel, but you see after the reaction to the data, by some analysis more based on the differential of rates, blah 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 blah, that you want to buy dollar, okay. We are now with euro dollar 110 and 22 right now. Okay, where we have a reference to the upside around 110.51, so 30 pips higher. If I buy right now at 110.22, will I be able to manage if the market goes against me 30 pips? How, for example, if I'm short euro dollar one lot, 40 pips will be $300 of loss. Are you able to manage it? Well, you can. Why not? Many people are able to manage it. But what happened here? Is 110 and 51 the last barrier? No, it's not, because even if very short term, it has even gone higher. In the past, in April, for example, it had touched 110.65. It has even come very close to 111, 110.93. So let's imagine that you are selling euro dollar, buying the dollar against the euro here at 110.20. One lot. If a price goes and makes a triple top, whatever you want to call it, okay, at 111, 80 pips above where we are now, this can happen. No, this can absolutely happen before reversing. Maybe you're right, but there's technical room to the upside. 80 pips on one lot are $800. Are you able to manage a loss of $800 before, while waiting eventually your trade to go in the right direction? No. What you should do is, having this idea, be like a sniper, not a killer, sniper. Wait for it, and try to sell it as close as you can to the tops. So that if you are able, let's say, to sell at 110.90, it goes to 111.15, and you get out of the trade at 111.20 with just 30 pips instead of one big figure. With let's say if you are with a 0.1 lot, with just $20 loss instead of $100 loss. Okay, so these are the kind of things that you should think. You must always know what the levels, and not the feelings. And sorry to say that, but it's the truth. My feelings, market doesn't care about nobody. No, not even about the biggest investor, the biggest bank, what they think. The market is a representative of what the majority of people are thinking. The majority of people can be also wrong. You know that. Anyway, Madame Messier, I hope it was interesting. 1 hour and a quarter gone. This has been Marco. 15 minutes to the CPI data. 3.1 expected. The headline 5% down from 4%. Let's finish with the clear data about the CPI in 16 minutes. The headline on a yearly basis is expected to be down from 4% in May to 3.1% now in June. The core number is expected to be down from 5.3% in May to 5% now. And as I think is less theoretical and very useful for you, just the stable provided very gently by the biggest bank in US that track some reaction to different readings, and yeah, this is only about SP 500. But once again, I will repeat the very last time: a higher CPI than expected, above 3.1 in the headline, will trigger a stronger dollar, a weaker gold, and weaker stocks. A weaker CPI reading will trigger a weaker dollar, a stronger gold, and stronger stocks. Madame and Monsieur, thank you very much. On Japan, on US dollar, yen. Hey Prince, yes. Listen, Prince, one thing. After this video, I already have an article ready. I will publish it. It's just about dollar yen. It's just about dollar yen. We have spoken about it before. Probably you just connected, and have a look. Analysis.hfm.com. Follow also us on Twitter, hf_analysis. Okay. Have to go. Thank you very much to all of you for the question, for the time together, and yeah. Speak you soon. See you soon. Next time it will be with Andrea, with me in a couple of weeks' time. Bye bye. Ciao. Thank you.